Welcome back to this Diwali special, the young guns of these streets. So you've got a sneak peek into the minds of all of these individuals who are here on the panel. We're trying to get some hacks, some investment ideas in terms of how to think. When you can think right, then you can identify the right fund or the right stock. So now it's time to hear from Roshi. Now, Roshi, tell us again about the thought process. From what you said earlier, discipline is clearly important. And with that, I want to marry my earlier question of whether it's more restrictive. I mean, all these folks here, maybe they have, a lot more latitude to move around. Maybe they can be more nimble. But when you're in a highly regulated environment like a mutual fund, and that to one of the largest in the country, does that crimp or restrict your style at all?
No, I think it's the way we are perceiving it to be. Right. Mutual funds want you to be wealth creators for your investors, and that's the objective, right? But it just has to be done in an environment where you bring trust among your investors. Each of them said things which actually can be part of a framework. It need not be the same framework, but you have to be consistent about the framework you're following. Mangalam, you asked, you closed by the previous section by saying your mistakes, and I think the biggest mistakes while not naming stocks have been where I've deviated from the framework, because then you lose conviction. So if there was a stock which was in the framework, and even if it was down 10-15%, you would be okay holding it. But when you deviate from that framework and the stock is down 15%, at the point where you should be topping up, you actually exit. That's the difference between having a framework and following it, because then you're able to go through the lows, navigate the lows, and participate in the upside. So I think that would perhaps, all of what they said is done in the mutual fund universe, by the way. Let's not make it appear that mutual funds are these boring,
boring is great, boring is good,
non-volatile, regular return kind of products. Active funds have beaten benchmarks in the last 3, 5, 7, 10 years, and not by small sums. One of the things, again, we tend to underestimate is, this fund has beaten the benchmark by 500 basis points over 10 years. Please, that is massive. Please look at your portfolios and see what the difference would be. So I would say that all of this is done in a mutual fund environment as well, just with more checks and balances and with a greater risk management framework in place.
And I must add over here that watch out for mutual funds. Anyway, I will always wave the flag. Because it is because of the mutual fund fraternity that we're getting in this 40,000 crores, and the market has been where it has been, right? That's the biggest celebration story for India this time around. And there is a new product, there's a new asset class that mutual funds will launch very, very soon. And you could have more strategies, more sort of stylistic, thematic, perhaps offerings very soon from the mutual fund world.
Add an anecdote to what Roshi was speaking about, restrictions actually being enablers. One of the things that happened when they put brakes and airbags along with seat belts in a car, most of them who wanted to speed said, hey, why do you put a brake? This is so limiting. One person said, no, this is not limiting. This is the one that allows me to speed because there are brakes. If I speed, I know that there are brakes that allows me to go past a certain speed. So, guess who became the fund manager from there?
Absolutely. Discipline is king, right? You can have all the thesis, you can have all the thought process. If you do not apply yourself with discipline, then every strategy perhaps fails. Okay, gentlemen and ladies, we are down to the last, rapid fire, quick. It's the here and now. So an idea in terms of how to put all that you've said, all the sort of intellectual part into practice. So Vikas, starting with you, you are of course rooting for the technology theme. I think you still like the Make in India, Atmanirbhar theme. So a wealth creation tip for the next Samvat and beyond.
I think number one, keep the expectations low. We are coming here on a very, coming back on the back of a great return period. So in this, in my opinion, keeping expectation low is very important, because everybody thinks that 20-25% return making is very easy, which probably might not be. So keep that part in mind. Other than that, I think, investing philosophy remains same, but I feel from now to next Samvat, if I were to say, I think financials will do very well, because I think that part has not done well in last 6-8 months, and I can see positivity going there. Pharma, healthcare will continue to do well. IT, we've been positive, and not all the whole pack, but within IT there are lots of interesting ideas where still acceleration growth is happening, 20% growth there. Chemicals is the one space where there are a lot of dislocation. People have written that off, and everybody's seeing China as a threat. But I think 25 would be a great year for them. There are lots of change happening and capacities are coming. So I think CDMO is a great space from a wealth creation from the next 5-10 years perspective. CDMO, CRO is where IT was in mid-90s. So I think I think there are enough and more opportunities, but I think from this Samvat to next Samvat, these are some of the sectors which can do well. But again, I would say biggest
Tone down
risk,
those expectations.
biggest risk is the risk of high expectation.
Okay.
And
Tone down expectations, so no 96% next year, maybe 95%. Where does that come from? Tell us. Next Samvat, what are you backing?
No, I would keep betting on growth, but I manage my risk really well. So you have to manage your risk. If things don't play out, if thesis
We
change,
have financials. What else do we have?
Financials and chemicals, he said.
Yes.
What else are you looking
No,
for?
all I'm saying that manage your risk. If things don't play out, if a thesis goes wrong, do manage your risk. Next year will be a very narrow market. Not everything will make money. Only a few winners.
So what will grow at 50% next year?
A lot of companies are the ones which I'm holding.
All right.
Okay. Ravi, your tip?
No, I think renewables is one theme which people are underestimating, the kind of S-curve adoption that can happen over here. And the entire value chain, it's not only about the solar module manufacturer, but the somebody supplying an aluminum mounting structure or EPC work, or everything is going to explode over the next 3, 4, 5 years. So valuations will look expensive. They are expensive. I'm not saying they are not, but if you have a long enough horizon, you'll see that they probably still make sense. Just to give you an anecdotal evidence, in 95, 96 also you would have found IT stocks to be very, very expensive. But if you are in the middle of a major boom, the absolute valuations are still going to go far higher than here.
Okay.
The 2 R's, risk and return. Let's call it. Rashi and
I
Roshi.
actually am hoping for a very narrow market, right?
Okay.
So for price dislocation, I would love to see some correction and a narrow market. And that is what provides me the opportunity to...
Where are the
really pick
dislocations
the
right
arrow.
now?
To my question. Yeah.
I mean, I hope both of them are right, and I'm squarely in that camp as well, where I do not believe that after this kind of run, we can expect another 25-30% of the market. I do think we will be in a very narrow range, and it should give good stock picking opportunities, and that's what I'm waiting for.
Do you see dislocations now? I mean, I don't want to get too specific.
You do.
But for
You do.
instance, I mean, some of these gas stocks, right? They've fallen off a cliff because of regulatory issues.
So
How
I'll
much
tell
gas
you,
allocation?
I mean, a year ago, last Diwali, dislocation was in life insurance companies.
Oh, yes.
Right? In a market that was even high back then, but people were not willing to look at it.
Yes.
2 years ago, the two-wheeler companies, the larger two-wheeler companies. I do believe the large private sector banks are at a place where the field is actually in favor for them. And
Okay, so we have financials, private sector banks, chemicals and renewables, or manufacturing renewables.
Roshi? It's easy for me. Just stay diversified. You've got all the sectors from them. So all you need to do is create a diversified portfolio, and it will do well.
I think
I'll only end with this. I think India gives you the advantage of being in some world-class companies in a very diversified manner. Look around our peers. They are all so sector-specific. So I would move away from this narrative-based investing to a more diversified business model-based investing, and I think it will work wonders.
I think her message every Samvat is mutual fund sahi hai.
Mutual fund sahi hai, absolutely. Okay, very quickly, I think we've got 30 seconds left on the chat. The mistake to avoid, because we are in a slightly different market now. So I think Vikas mentioned that. Keep your expectations. I mean, if you're thinking 30%, that's a mistake. The mistake you would want to avoid, Amit.
Cut your losers. If you have, if you cannot average your loser down, never ever do that. You need to know when to cut losers.
Don't trust a management that has not acted in favor of minority shareholders.
Lovely.
Okay,
That's a very nice one.
Great one.
Don't
Roshi?
buy stocks where you don't understand why they are going up or going down. Understand and know your stocks before you invest in them.
Okay.
Stick to your discipline, stick to your philosophy, and don't, style deviation is always the death nail.
You have a new one? He's itching to say something.
And avoid FOMO.
Avoid FOMO. That's I think it's a brilliant way to end. I mean, I think FOMO can be the, the mother or the father or the brother or the sister of all evils. And this Diwali, we need to keep the evil away. So these are the mistakes to avoid. Thank you so much, ladies and gentlemen. It's been a very, very enriching conversation. Very helpful, and I think our viewers will go back, take a lot from this, they'll chew over it, and I think it'll help make them wiser decisions.
Chew over this while chewing over all the Diwali munchies that they're having. May you have a cracker of a Diwali with your loved ones, your family, not just this one, the next one as well. And by the time we return the next time, maybe on those low expectations, you actually make a very high return as well. Thank you so much for watching.
Happy Diwali.
From Surbi, me, all of us, a very happy Diwali.